Good evening, everybody. It's Tuesday, October the 11th. We're about an hour and change after the closing bell. Lots of sell-off at the end of the day here. Markets overseas. Lots of news coming out from Europe. Let's talk money. Let's talk market wrap-up. All right, everybody. So let's just jump right into the news today because we want to focus primarily on what's going on in Europe, especially with the Bank of England. As many of you know, the Bank of England recently said that they are going to start printing money in a quantitative easing, and they are going to do whatever it takes, essentially print as much as necessary to stabilize the bond market, which they have been. If you've been watching global bonds, U.S. bonds, you can clearly see the efforts of not just the Bank of England, but all central banks trying to stabilize the debt market before the entire system collapses. But here's an interesting note that was made by the Bank of England today. So the Bank of England warns that it's going to be cutting its bond buying program in 3 days. In other words, by the end of the week, they are telling everybody to get their affairs in order because they will stop quantitative easing. Now, will they really? Probably not. It just won't be quite as public with the display that they've made recently. They've also stated that quantitative tightening probably won't kick off until much later this year. Reality, it's probably not going to kick off into even next year, and who knows even beyond that. But British pensions are in trouble here. Because British pensions, and here's the actual article title. British pensions step up multi-billion pound asset fire sale as need for cash soars. Now let's talk about that because it's not a small amount. We're talking about 320 billion pounds. And now with the Bank of England wrapping up its bond buying, supposedly, program, that means that there is no buyer of last resort here for the pension schemes, which puts them in a very precarious position. But let's take a look at other news because the IMF warns of a continued slowing global economy. And this is not the first time the IMF has come out. They've also come out and stated that there's also other crises as well that we need to be aware of. But this is important because it's not the first time they've rung this alarm for a slowing global economy. UK consumer spending is down. Australian consumer sentiment is down. US mortgage applications fall to the lowest in 25 years. Now, keep in mind, we still have a credit problem. We have a currency crisis. We have a liquidity crisis, which is just accelerating and speeding up. And I think that's not going anywhere anytime soon. In fact, I think that the impact of the liquidity crisis is going to be felt much sooner than later as they continue to increase rates. Because today, Fed Rep Mester says that the government hasn't even made a dent to inflation. With all their efforts to stop and curb inflation, it's done nothing, which we've talked about many times, over and over. I think we've beat that horse to death and then continued to beat it even further. But none of this should be a surprise to any of you because of the amount of coverage that we've put towards this. Even other YouTubers have put a lot of coverage towards this, understanding that inflation isn't going to go anywhere because all of the measures that are being taken are actually inflationary on their own. Bond buying, quantitative easing, money printing of whatever sort you want to call it, inflationary. Small increases in interest rate, inflationary. Going from one crisis to another, finding more cash for each crisis, inflationary. So I don't know what was really expected here. I don't think this should really come as a surprise to anybody here that Mester has come out saying that they haven't made a dent. I mean, the numbers speak for themselves, really. Now, the question is, how much higher will inflation go, especially as energy continues to be expected to soar into the winter? And in fact, if that does happen, you can anticipate that inflation will probably comfortably hit 20 or double digits in the US. definitely in Canada as well. But let's talk about some other areas of important information here, just a telling of where the markets may be headed. Because GM has taken an equity stake in an Aussie mining company. Really, they're looking for cobalt here and nickel. Now, that is going to be very telling because if they're starting to take positions in mining companies, that means they're starting to hedge against any kind of soaring costs that can come from an increase in the commodities. Keep in mind, silver is only a matter of time before those mining operations can begin to get bought up, even though silver is typically not mined for on its own, but is rather a byproduct of mining other areas or for other commodities. But that's just an interesting note. GM starting to hedge against any potential increase here in commodities prices. Now, not a heck of a lot more I want to really get into today. This video is supposed to be a short one. Wasn't really planning on doing one, but just watching the reversal in the markets today, I thought it's important to come out and just give some insight as to what's going on. Again, many of you know I'm already very negative on the market. I really don't look at the market in general, but rather I do watch the debt market. So really follow the bonds here. I continue to do so. Watch the US dollar. If we take a look at what happened in the markets overall today, we can see that the Dow Jones ended up finishing around 36 points in the green. The S&P 500 fell 23 points in the red. NASDAQ down 115. So very, very much a negative sentiment out there, especially after we've taken a look at the overall reversal in the market. If we take a look at commodities, and the 10-year yield in particular, the U.S. 10-year yield did finish about 165, 1.65 in the green today. Commodities, again, it was mixed to start the day, continued throughout much of it. Not really a heck of a lot going on there. I do anticipate commodities will continue to move, but for now, they did end up finishing a little bit in the red. Cryptocurrencies, nothing really interesting in my opinion there. I do continue to believe that there will be pressure, but they are holding within a tight range right now, but there will be continued pressure there as long as the rest of the market continues to see red as well. There are a lot of big numbers coming out this week. Keep an eye for my morning quick 1 minute short. You'll see a little bit more information on the daily about what's to be expected throughout the day and what reporting will be coming out. That's it, everybody. I will see you tomorrow morning at the opening bell.